Hello, this is Mike Swanson. I run the website WallStreetWindow.com. And today I got a very special guest. I'm speaking with Jordan Roy-Byrne, who runs the website The Daily Gold. How you doing today, Jordan?
Hey, Mike, I'm great. Thanks so much for having me on. How are you?
Oh, I'm doing wonderful. This is a historic month, I'll put it that way, for gold. This March of 2024. And I've known you now for many years and followed your work and your website, and we've done interviews off and on. And I got to say, you were there. You've been talking about gold, and the history is now happening. It's broken out to new all-time highs.
Yeah, and I think you put it perfectly. It is a historic breakout in gold. Gold is finally breaking out from a 13-year cup and handle pattern, had a 9-year cup, and then the handle lasted about 3.5 years to be specific, since it began when the market peaked in August of 2020. And I thought that when it was building the handle, maybe it would last 2 years, 2.5, 2.25, somewhere in there. I never thought it would last this long, but um, nevertheless, it lasted much longer than I thought, and it finally broke out to the upside. And as you said, this is historic. I mean, when you have this long of a pattern, this bullish of a pattern, because cup and handles are really the most reliable patterns. And again, something that lasted 13 years, that is really significant. I mean, that bodes incredibly bullishly for gold and precious metals, not just for the next couple of years or 3 or 5 years. I would say for the next decade. Like you can go back and look at major market breakouts, bases that lasted at least 12 or 13 years. And you look at various stock markets and commodities, like there's less than 10, maybe only 5. There's not that many of this significance. So it just cannot be understated how important this is. And when you look at these other historical breakouts, they made huge moves after they broke out from these multi-decade bases. I mean, the commodities made really huge moves in the next couple of years after the breakouts, but when you look at various stock markets, I mean, they made huge moves over the next decade. And I think, we had oil and copper both broke out from, 20 plus year bases in 2004. But I think this breakout is going to be more long lasting than those, because oil and copper have a strong supply demand component, unlike gold. I mean, gold is really driven not by the industrial side, but it's really 100% monetary. Whereas with gold and copper, as they break out and run much higher, there is that supply demand element that will pull them back down. So if you put those breakouts aside and then you look at all the other historical breakouts, I mean, they had huge moves, not just for a couple of years, but really for the next decade after the breakout. So that's what we're looking at. It's going to be a really, really exciting time for precious metals. There will be lots of volatility. And again, if this is something that's going to last another decade, there might be one or two sharp bear markets in between. But this is the start, in my opinion, of a new secular bull market in precious metals. And this is going to be really exciting moving forward.
Oh yeah, this is a market now for people, gold bugs, so called, and then silver stackers. That they're going to come out ahead for sure. They're already starting to. I'm showing your article you wrote on March 5th, describing this cup and handle chart pattern. People can link to it. I mean, click it. I got the link in the description of the video. They can read this and get a better understanding for it. I always find I like to hear people, but I like to read too. It helps me. I want to bring up two topics that we've spoken about in past videos with you. One is the GDX, the mining stocks. So, gold broke out to new all-time highs. The mining stocks. This is the GDX ETF, which I do own a position in, but the mining stocks are not at all-time highs, and in fact, they traded very sluggish compared to gold. Newmont had horrible earnings and gapped down. They cut their dividend several weeks ago. Do you think? What do you think? I mean, today GDX is up good percentage wise. But what do you think has been the cause of this underperformance of the mining stocks, and when do you think it'll really start to improve? Or maybe, perhaps it's beginning to. I'm not sure. They got a lot of catching up to do.
Well, there's three reasons, at least recently, why the mining stocks have really underperformed. And if I go through those quickly, you have the introduction of the gold the GLD ETF, and then other ETFs in the mid 2000s. And then the second and third, I mean, secondly, you've been in a secular bear market in precious metals since 2011. And third, which is kind of, it's somewhat linked to number two, but third is mining margins, especially in the last 4 years, have come down significantly because of cost inflation. So you have these three drivers, and now with gold breaking out to a new all-time high from a 13-year cup and handle pattern, it appears that we're going to start a new secular move, a new secular bull market in precious metals. So gold, silver, platinum as well, in the mining stocks. And so that eliminates two of the three issues that have been driving down precious metals. Now, to go into depth or detail on those issues, gold stocks against gold, like any ratio chart that you're looking at historically, it really peaked in 2005, 2006. I mean, that kind of time frame. And that's exactly when these new gold ETFs were introduced. So until the mid 2000s, Mike, and you know this, there was no retail way to buy gold. You had to go to a shop and buy bars or coin. You couldn't buy it with your brokerage account. So you could only buy gold stocks. And so, in fact, in the 1960s, this is why gold stocks did so well when inflation started picking up, and people, I mean, they were looking for, what can I buy here? There's no tips, there's no emerging markets, there's no forex, so I could only buy gold stocks. So, and that was still true up until 2004, 2005, when GLD was introduced. So now retail and other investors, now they can easily buy gold. And so that's really hurt the miners vis-a-vis gold. But however, more recently, since 2011, when gold peaked, you've been in a secular bear market for precious metals. I mean, if you think about, we just go back, a month before we had this move, and gold is somewhere in the mid 1900s. What was the price at the 2011 peak? 1900, 1920. So the gold price had not gone anywhere for over a decade. And yet, if you think about the average mine, the costs in the last 10 years, I mean, they're up significantly, really. And even if you just focus on the last 3.5 years, where you had 2000 gold and you had, like, let's say you had a mine where the cost was 1,000. Well, if you're running the same mine, the cost at this point is probably 1,300, 1,400. So in the last 3 or 4 years, cost inflation really hurt mining margins. But what nobody mentions at the same time, the gold price is flat, the silver price is down about 20%. So this is squeezing those companies on both sides. Now, if I'm right and we're going into a new secular bull market in precious metals, you're going to see over the coming years, again, there'll be bear markets and sharp corrections in between, but you will see higher metals prices consistently over the coming years. And so that is going to allow or facilitate the expansion of mining margins. So in other words, yes, costs will go up as we have higher inflation, but gold's looking at 2,200 now, maybe in a couple quarters, it's 2,500, maybe at the end of the year, it's 2,700. And yeah, maybe costs are going up a little bit, but when you have that bull market in metals prices, they're outpacing significantly the cost increases that will come. And so that wasn't the case over the last decade, over the last 3 or 4 years. So that tells you why the mining stocks have really underperformed the metals. Now, I do want to mention, if you look at trending moves in precious metals, and again, I mean, this from the early 2000s, like if you look at points when gold had a major breakout, now there's 6 or 7 historically, but if we just focus on some, you look at what happened 2009 to 2011 in the miners. You could pull up GVX or the Huey, like you could pull up a 20-year chart of the Huey. But you can see miners, again, you look at 2009 to 2011, they really outperformed gold at that point. You go back and you look at, I think, the 2005 to 2007 period, they outperformed gold. And this, Mike, the early 2000s, when you got into gold stocks and did fabulously well, at like 2002 to 2003 when I think gold broke above 300. So
That's right.
the miners, yeah, the miners were really outperforming then. So if you're looking at trending moves in gold, where gold has a breakout and then it's going to run for a year or 2 years, those are the times you really want to be in miners, because history shows those are the times when miners will strongly outperform gold. Now, if we're talking about the next 10 years or the next 15 years, I'm not sure if miners are going to outperform gold over that entire time frame, but there's going to be segments in between where you get the miners are really going to sharply outperform gold, and that's what we're going into now, assuming gold's going to run to 3,000 or 4,000 on this breakout move in the next couple years. That's a time frame where miners are strongly going to outperform.
I don't really know the reason for this, but I've noticed since 2020 that at times, I would look at silver too. I own silver, I own gold, but there have been times where gold has outperformed silver, and then silver has lagged gold. And I don't know the reason for it, but there have been a couple rallies since 2020 where gold and silver are going up, and then silver starts to perform negatively, and the mining stocks seem to follow it more than it did gold. Like the little decline in silver when gold's going up or not going down would be a negative, and then but now and we've seen that this year or the past several months. Silver is not performing as well as gold. It's not at all-time highs, but it looks like it might be coming alive now. I mean, silver's having a really good day, so I'm thinking of that as a positive, although I don't really know why the mining stocks be more correlated to the price of silver than gold. I don't know if you got any idea why that would be.
Yeah, I mean, I've heard that, and it does. I mean, it is an accurate observation. I'm not sure. I'm not exactly sure what it is. I mean, they both have that leverage aspect. So certainly when gold's breaking out and running, as I just said, you want to own miners, but at the same time, that's when silver outperforms. So I just think it speaks to the leverage and the performance of both against gold. But I'm going to look at this in more detail, but I did post a chart in my free newsletter, and I posted it last week, and I'm sorry I don't have it handy. But I just looked at the last 50 years, and I marked, just with a vertical line, I marked all the breakouts in gold, and I had silver below it, and then silver divided by gold. And so it's very interesting because after these 6 or 7 breakouts or so, it's mixed performance in terms of silver against gold, like right away after the breakout. I mean, there's some instances where it might take a couple weeks or a month, and then silver starts to outperform gold. There's some where it took months and months for silver to outperform gold. But Mike, the bottom line is, in all of these 5 or 6 instances, eventually silver strongly outperformed gold. So if we're thinking, okay, gold has a measured upside target of around 3,000, I think it could get to 4,000 in 2 years. If that's going to play out in that time frame, you will see silver strongly outperform gold eventually. It may not begin right now, it may not begin in the next 2 months, but eventually silver is going to really outperform gold. And that's why it's such a fantastic trading vehicle, because I like to say, buy gold, and then when gold breaks out, buy silver. Because silver, it hasn't moved that much, and a lot of silver stocks, I know they're starting to move, but they're still way off their highs. So I would say, regardless of how silver performs in the next couple weeks or next couple months, I would expect it to eventually strongly outperform gold. And I think, looking at silver, if you just look at silver by itself, 26 is really the key level. It's weekly and monthly resistance. I know that silver is now up in the 25s today. So silver has to chew through that 26 to 28 zone. But in the short term, I think, or at least in the medium term here, I think 26 to 28, that's a good area to focus on. So again, look for a weekly close or a monthly close above 26. That's really the key resistance for silver right now.
Well, I mean, from what I've seen the past couple of years in that 2000s, which we're going to mention with you in a second, when silver closes above 26 on that weekly close, as you're talking about, it's at that point I would expect the small cap mining stocks to just start to really go nuts and surprise people. What I've got here is the silver to gold ratio, and I just want to point out that I first bought a mining stock in early 2002, and that was the year gold went through 300, which you mentioned. And in that year, the big cap mining stocks had huge rallies from January to like July. Like they went up, they more than doubled. And then they had a violent correction, but silver didn't really do much. And then there was a big correction in gold in the mining stocks. But it was at the end of 2003 or early 2004 that silver came alive, and then it outperformed gold going into the fall October crash of 2008. And when silver had that breakout, and it was 2003, 2004, that's when the small cap mining stocks, they went completely crazy back then. I mean, there's stocks trading for 10 cents that went to $1 and so forth. So that I'm thinking that's kind of what we got ahead of us now too at some point.
Yeah, absolutely. I think it's very possible over the next year or so that we could see that. And yeah, you noted the relationship between silver and the mining stocks, and also the juniors, the really small mining stocks, which of course they're very risky. We know that they move in both directions, and I think we're setting up for a powerful move, um, from all those groups. But again, circling back to silver, yes, I think when we see silver outperforming gold and the mining stocks really strongly outperforming gold, that's going to be a signal of, or I should say, it is a signal of money and capital is flowing into precious metals, and then it's flowing downstream beyond just going into gold ETFs and the senior miners. And so, um, again, that's going to lead to silver outperforming gold, the miners outperforming gold, and then the juniors really outperforming everything eventually. So, I mean, I don't know. I mean, is it when silver breaks 26 or when it breaks 28, or is that when gold breaks 2,400? I mean, it could be. Those are just some levels I'm throwing out there. But I do think that's on the horizon. I don't know if it's going to happen in the next, couple weeks or month, but I do think those things are on the horizon.
Okay, I want to bring up one more chart as we've talked about it before. And this is the gold. It's gold SPY ratio. Comparing the performance of gold to the S&P 500, and we've been looking for this to turn up, to meaning gold would outperform the stock market. I think we both mentioned, I mean, in videos of the past couple of years, that once that happens, that's when the real secular bull in gold would really happen. But it's not turned up yet. So I'm asking what you still think of this ratio, and do you still think it's important, and when do you think it would turn up?
Yeah, this ratio is extremely important, Mike. If you look at the moves in the 2000s in gold and precious metals as a whole, and also in the 1970s,
Yeah.
those occurred with gold outperforming the stock market. And so we could go back to 2016, and yes, gold has, it's done well. It bottomed at 1050, it basically doubled. But you look at that time frame, the miners haven't really done much, silver hasn't really done much, and then you look at gold against the stock market, it's made lower lows. Like you could point out on that chart, you could look at 2016, and there's a bit of a double bottom there.
Hmm.
Well, gold from that point is like twice, it's 2x where it is, but it's completely underperformed the stock market. I mean, really negatively. The ratio's gone from 6 down to 4. You can see that. And so again, if we're going to have this huge bull market where gold goes to 3, 4, 5,000, eventually 10,000, and probably higher into the next decade, that has to come with gold really outperforming the stock market. So, like where we are here and now, I think gold can get to 2,400, maybe 2,500, regardless of what happens with the stock market.
Yeah.
But for this bull to really happen, gold has to outperform the stock market. And so that means you have to see the stock market go into some kind of downturn. You need a recession, a bear market, all of those things. And if you look at the S&P 500 and you look at a monthly, if you look at the 40-month moving average, that's kind of my demarcation line for secular bull and bears. So if you throw up like a 40-month moving average, that does a really good job of defining secular moves in the stock market. And so for the most part, the stock market is held above the 40-month moving. It tested it a couple times in the last year or two, but it rebounded. And so that's something I'm looking for on the next downturn. Like we get a recession, the stock market corrects and moves down. If it breaks the 40-month moving average convincingly to the downside, that's a signal that a new secular bear in the stock market has started. And that is also a signal that you're going to see this bull market in precious metals really kick into high gear. So that's the missing link right now. We have not had that yet because the stock market is still moving higher. I mean, gold is outperforming it. Money's starting to flow into precious metals. But again, we need to see that downturn in the stock market. Because if you tell me the stock market's going to go to 6,000 or 7,000 the next couple of years, I don't see how precious metals are going to have this fantastic bull market with the stock. I mean, with the stock market still running, you need the stock market to crack, fall below that moving average, and then all these people psychologically, they know it's over. They got to move the capital elsewhere. Then all that money goes into precious metals. I mean, you saw that happen in the early 2000s, Mike. So that is what is needed for gold to, again, get to 3,000, 4,000, 5,000, much higher. You don't get that without a downturn in the economy and the stock market. I do think we are going to see a downturn, sometime in the next 12 months. And that can really push the gold price, much higher. You have that downturn, then you're going to see the gold price go above 3,000.
Well, I think the S&P could be below that 40 monthly average next year, sometime next year. That's my guess. Which
that's not a bad guess. I think it's quite possible and maybe even probable.
Yeah. Well, I think it is. Well, but I'm not on the short term. I'm not bearish, and I don't want to talk bearish because people get angry, and if it's not going down next week, they say you don't know what you're talking about, and I don't think it's going to go down next week, but but yeah, after the election, who knows, or after New Year's. But the gold can still go up, and then it's more that to get it to go up for 10 years like it did in the 2000s.
Right.
We really need what you're talking about, because here's the S&P 500 from 2002 to 2007. It wasn't that exciting, and gold and silver were the places to make money. It was just amazing what gold did, from 300 to briefly over 2,000 in 2012. But let me ask you, like, with your subscribers and people, what are you advocating people to do now in these markets? I mean, here's gold has jumped up, some people are scared it's gone up without me. Do I need to buy now before it goes higher? Do I need to buy mining stocks? Well, what do you think is the best thing for people to do?
Well, I mean, it really depends on every person individually. I think if you're just going to buy, the metal ETFs, gold or silver, I think if you just want to be in that, just dollar cost average or cost average every quarter, that's a good plan of action. If you want to get into the stocks, everything is company specific.
Yeah.
Look at companies, try and assess their value and assess a good entry point. And so if I'm looking at something and I think, well, this has 5x potential in the next couple of years, if it's gone up 20 or 25%, then I don't care. And obviously I'm not going to try and chase it if it's gone like that. I'll wait for a couple of days or a couple of weeks and and then buy it at that point. So it comes back to value and what's the potential over the next couple of years. And I'm looking at the gold price right now, like what's the value right now. And so if I think there's something that at this gold price, this could double or triple over the next year or two, then that's a really good buy, because that company doesn't need a bull market or dramatically higher prices to be successful. But if we do get that move, then this is something that can double in a flat market. That could triple, quadruple, quintuple. That could move a lot more as metals prices keep moving higher. So, I mean, that's something I try and do. And you just have to use common sense. If something's underperforming, you want to cut the loss before it gets too big. I mean, I've made all the mistakes that you can make, investing in minors and juniors. But, if something it becomes a huge winner over the next year or two, you don't have to sell the whole thing, sell half, sell a third. You can do things like that. And like I said, if something's not performing, if it's really underperforming for a while and you're down 20% or 30%, I mean, you want to sell that and move into something else. Just be prudent, be disciplined, just trim your profits when they are there. And that way you can take money off the table and still let those profits run. But it's a lot of common sense and things like that. And so I think each investor, if they're going to invest in the minors and juniors, they have to have a plan of action beforehand. They have to think, okay, well, I think this stock can go to this level. If it happens, I'm going to sell X amount. Set a plan for yourself that way, because if you're just winging it, then your emotions are going to take over. You're not going to sell. Again, I've made all these mistakes. If something goes up, 5X or 10X, and you're not going to sell, because then you convince yourself it could go up another 5X. So you can, I know I'm just rambling on here, but you just have to have a plan of action for yourself. Be prudent, be disciplined about it. And we're early into this new secular bull market, so you don't have to worry about missing it. I mean, we're in the top of the first inning here, to use a baseball analogy.
Yeah, and a lot of the small caps haven't even started to really move yet. In in 2002, that year that I started getting into this, I'm not an expert on individual mining companies. I'm just not. And back then, I subscribed to one publication, and the guy does. I don't think the guy writes it anymore, so I'm not going to mention it. I think it's ghostwritten. But anyway, he did it, and it was good analysis of the companies and valuation metrics, and I used that to pick out some huge winners. So I would recommend that people subscribe to something like your newsletter to get the best get an idea of what the best small cap mining stocks really are.
Well, yeah, thank you for that endorsement, Mike. And yeah, I'll just mention, I mean, we're in this because, excuse me, again, you go back to the 60s or even that Super Bowl market of the 70s, when gold and silver, when they really started to go vertical, and it happened a couple times. I mean, you just saw outrageous gains in these tiny mining stocks. I mean, they, 10, 20, 30, 50X. I mean, we've seen that in tech stocks. We've seen that in crypto. We have not seen that in the mining stocks or juniors. But I'm very confident that that is coming at some point. I don't know if it's going to be 7 months from now, or 7 years or 2 or 3 years, but this is the place to be over the next decade. Like, we can see some really spectacular gains. And again, you have to have a plan to know how to deal with it when it happens.
Well, I'm just going to show one last chart to give an idea of what's coming. This is a stock. I don't own it. I wish I did own it at the moment, but it's up 11% today. Southern Copper Corporation. It mines copper. Look at 11%, boom, just like that. Those are the kind of moves that happen in these individual mining stocks. And
that's an NYSE stock, by the way. That's not a tiny one.
No, and copper's up today, and I don't own that one, but I own this one, Rio Tinto. So not up as much, but I'll take a 1% gain today. I'm not crying. And they both paid nice dividends. I just say 11%. Then there's other stocks up like that too. Well, thanks for taking the time to talk with me, and I recommend everyone go to your website, dailygold.com, subscribe to your email newsletter, and they can find you on YouTube too.
Yeah, thank you so much. Thank you so much, Mike. Much appreciated.
Thanks.